Hey, Alex Yao here with Remax Select Properties and YaoRealEstate.com, and welcome to Real Estate Matters June 2024. Yes, we're already in June, and sales are up. It's right in the middle of the spring season now, and it's very typical with the sales going up and activity going up in the spring here in Vancouver. However, there's even more new listings on the market that's outpacing sales. The current challenge is actually to be able to react quickly and correctly to these all new government interventions that's happening right now. Now, with the election year coming up, it's quite typical to see them make rash decisions to sway more votes. Good news is that the Bank of Canada interest rate has just dropped 25 basis points, so 0.25%, which is definitely a small step in the right direction, if you ask me. We've been kind of waiting for that since the beginning of the year, and finally it's starting to happen. Hopefully, there's going to be more on the way. Now, in this current market, sellers, buyers, I'm going to give you the exact same advice as last month. I was hoping that it would be a little better, positive, a little more activity based, but sellers, pricing, and marketing are still the absolute keys in this current market to be able to sell a property. Dreamers are left hanging with increased carrying costs. There's no shortcuts right now. Selling in this current market, you have to do everything to the fullest extent, whether it's pricing accurately, whether it's marketing effectively, whether it's knowing the target market, whether it's knowing exactly what your strengths and shortcomings are in not your, but your property. So everything has to be really transparent to yourself. You have to be able to understand what the buyer may be saying or thinking before they even come in, so you can adjust your mindset and your preparations to that. Now, buyers, there's more home for sale now to choose from, just like last month, but even more so now. So be sure to do your homework on the properties that you're interested in. Know what the current market value is. You don't want to overpay, but if you want to get a deal, you may not be able to do that either. Right now is what I call a very honest market. Sellers, you have to be prepared. You know exactly what your numbers are. So do the buyers. And that's how you can kind of come and meet in the middle. So you must be realistic. Just because listings are outpacing sales, it doesn't mean that it's all of a sudden a buyer's market now. It's not. It's, like I said, a much more balanced market, a much more honest market, where it rewards buyers and sellers that are more realistic, because that's how you get to the agreed upon price, kind of right in the middle, where that's kind of the current market value. So that's kind of the current question. We have, of course, all this statistics that's on the bottom of this email. But if you have any questions, feel free to reach out. Now, this month, question of the month I got asked a lot is, if I can't seem to sell quickly in today's market, is it a good idea to rent it out for a year and then sell next year? I don't know if you're in the same boat. I don't know if you have had the same thoughts. That's a question I got asked multiple times this month, just because the way the market is. So this pertains to your investment property where your tenant is leaving, or you're selling a current month-to-month tenanted property, or even for those that purchase another property to move into and looking to sell the previous property. It really depends on the situation, to be honest with you. Overall, if you don't initially have the intent to rent it out, obviously if you did, you wouldn't be asking me this question. So if you don't initially have the intent to rent it out, or to continue renting it out, if it's currently rented month to month, stick to the plan. You have to stick to the plan. Here are the 5 reasons why it may not be a good idea to rent out a property in today's climate. Again, keep in mind, this is short term, within a year, okay? So number 1, generally tenanted properties don't get as much love and care as owner-occupied properties. And I'm sure you're aware of that, right? it's going to show over time when it comes time to sell it. Tenants they just don't have a vested interest in your property like you do. Number two, carrying costs. It would be great if the rental income covers, all your costs of carrying the property for the next year. That includes mortgage, strata fees, property taxes, insurance, management fees, etc., etc. But chances are that it doesn't. Now, if it does, it probably means that you have a little too much equity in your current property that could be better used elsewhere. So carrying costs is a big thing. You might be, throwing in a few $100s or $1,000 here and there every month just to carry the property. So not sure if that's the right idea in today's climate. Number three, if it was your home that you're renting out now, that you're looking to rent out now, it is no longer an exception to the capital gains tax. So you will be paying for any profit margins you make on it from this point forward. Let's say it's worth $1 million now and you sell it next year for, let's say it goes up to 1.1. That $100,000, you're going to be paying capital gains tax. That's income, okay, from rentals, which CRA considers a business. Even if, as we mentioned previously in point number 2, your rental income covers the carrying costs, it may not be worthwhile due to potential opportunity costs. You could be using that equity elsewhere to make more money, right? So number 4, when you do decide to sell, now you just added another layer of complexity to the process. Buyers won't be able to have a quick completion and possession anymore if they need to, because eviction notice periods would be increased from 2 months to 4 months. And that's going to narrow your buyer's market significantly, which may result in lower sales price and or longer sale periods and higher carrying costs. Number 5, we just don't know what's going to happen next year. We just don't. I don't have a crystal ball. You don't either. If we did, we would not be working, right? So as I always say, a nickel in hand is better than a dime in the bush. So you're accumulating risks and costs to hopefully be able to make a bit more next year. And how much is that bit? At the current rate, a year is not likely going to make that bit significant enough to justify waiting. It's not all doom and gloom. Now, does this mean that all rental purchases are bad right now? Absolutely not. This is a scenario for those that are looking to sell now, but it's taking longer or presenting more challenges than expected. For those that are looking for investment properties in the longer term though, let's say 3 to 5 years or so, the challenge in the current market conditions are moot, because at that time, it'll be a totally different market and essentially you're hedged by time. Okay, so that's it for this video. If you have any questions regarding the market or selling your home or moving homes, feel free to give me a shout. I'm happy to chat. See you next month.